And guys, hang out with me because, as I said, I'm going to keep my presentation pretty brief. But after that, I also have a very special surprise for you. So we'll do final Q&As and everything else. And I know everybody who's hanging out with me is an inveterate market junkie. So therefore, I will hopefully satisfy your thirst for it. So let's start with sort of the initial idea of the presentation that I had, how to beat the market with less risk. You can follow me, by the way, of course, on Twitter at FXFlow. And I will be the first one to admit that I stole the whole idea from Michael Botnick, who writes the Irrelevant Investor blog. Great guy. If you guys listen, he's got a great podcast. I highly recommend you guys listen to him. And this was a sort of a thought experiment he did about what happens if you miss the worst and the best days in the S&P, right? And the first premise here is that if you missed the 25 strongest days in the S&P since 1990, you basically could have just parked your money in treasury bills. You made zero money as a stock investor if you missed just 25 of the best days. And this was the really, really big argument for why you got to buy and hold, because you can't time the market, because you snooze, you lose those 25 days and you get killed. However, what you realize is that when you actually ran the data set all the way from 1990, was that those big days bunched up very much during along with the sell-off days. That there was, that they were very, very close to the volatility days. That there was no such thing. There was high amount of volatility in big days and slow days. So since 1990, the best days to follow the worst days were higher volatility meant that it was in a bear market. So basically, what would happen if you missed the 25 best and 25 worst days? If you said to yourself, you know what, I'm perfectly happy to avoid the 25 best days if I can also miss the 25 worst days. Because remember, there's two ways to make money. One way is to hit big winning trades. The other way that nobody talks about is to not lose lots of big losing trades, right? That's the thing, that's the second part that everybody else forgets, is that, yeah, so what if I hit a big winning trade? If I hit 3 losing trades, then it doesn't matter. I just did something to my grid here. Hang on a second. Okay. So that's the thing that's kind of interesting. Well, what happens if I give up the upside, but I also save the downside, right? So how does that happen? Well, looky here. All of a sudden, if I give up the downside, if I give up the upside, but I save myself the downside, I actually make a ton more money than a buy and hold. This gray area, which outperforms the black area is the buy and hold. The gray area actually made me $15 for every dollar. For every 10,000, I made 150,000, or 15,000. For every 10,000, I made 150,000 versus 100,000. That's like a $50,000 difference over that time frame just by missing losers. Missing losers is so much better than hitting winners. But question is, how do I know how to miss losers? Do I have a crystal ball? Do I have an idea of like when the market is going to go down, when it's going to go up? Well, the answer to that is you actually do. This is the surprising part that Michael Botnick figured out. Basically, he ran the numbers and he realized that since 1997, and the only reason he stopped 97 is because that's as far as the data set goes. It probably works very much similar all the way back there. 47 out of the 50 best and worst days, the days that were bunched up together, occurred when the S&P was underneath the 200 simple moving average, right? When basically we were underneath, when we were in a quasi bear market. So he said, well, what if I just simply did the following? If the market is above the 200 simple moving average, I own the S&P, whether through futures, through CFDs, through ETFs, doesn't matter. I own the S&P. And if it's below the 200 period moving average, I buy the aggregate bond index. I buy the global bond index. I just simply put my money into essentially a very safe yield, right? So long market when I'm above 200 SMA, in cash when I'm out. what happens? What would happen if I did that? Looky here. There were quite a lot of times when I had to go out of the market, right? So many times, as a matter of fact, that there is no single human being that could have done this strategy by themselves. Because the whole essence of this, by the way, was that you had to get out of the market every single time it dropped below the 200 period SMA in order for you to be able to achieve this, getting this massive outperformance, right? And even still staying ahead of the market over here. By the way, I think this was stopped at 18, but if you were to simply run this right now, we're pretty much right over here at the 20 times. So I started 97 at $0. I make 20 over here, or I started, let's say, at 10,000, and I'm at 2 million over here. So avoiding losers, the insurance company way of doing business, really outperforms the buy and hold. But look at this. I got to be. It's like manic depressive. I got to be in out in order to achieve it, right? So this is what happens if you do buy and hold, and this is what happens if you come in and out of the market. You just completely outperform the market all the way through from the great first crash of 1999. More importantly, this is the single thing that will blow your mind. You see that little line over here? This is why everybody loses long-term as an investor. Because once you get past 20% of your account being lost, once you lose more than 20% of the account, 89% of you, that's not a real statistic, I'm just kind of making it up, but you get my point. Yeah, 200 SMA on the daily, that's correct. Somebody's asking me that. But once you lose 20% of money, 89.9% of all human beings sell at the bottom, buy at the top. Meaning that you're not gonna stay and buy and hold. What you're gonna do is you're just gonna puke your money out, never come back, and just pretty much lose your money. And it's gonna be the same kind of cycle. You're gonna puke your money over here, buy over here, puke your money over here, buy over here. That's just the nature of human business. Nobody can hold. I don't care what you tell me. Nobody can survive more than 20% losses with equanimity. Okay, unless you're Linda Raschke, who is an amazing person. But for the rest of us who are far less structured, disciplined human beings, we can't do it. So the absolute beautiful part about this strategy is that it never lost more than 20%, even in the worst parts. This is the thing that's fascinating. When you avoid losers, it's not so much that you make so much money, is that you're able to stay in the game to make money. That was the great insight that Botnick had, right? But there is only one problem here. You have to do 160 trades over the last 25 years. Do you think any of you could have done more than 5 before you got bored, before you got pulled away, before something distracted you, before whatever, a million different reasons, right? Of course you couldn't. However, if you used automated trading, this system would take Daniel, who's coming on next, maybe 5 minutes, maybe 10 to program, right? And it can run for the rest of your life, literally for the rest of your life, because the robots will trade this for you every time, always in the right size, never forgetting your stops or never forgetting your exit parameters, never making sure that you need to buy instead of a sell, and never missing a trade, right? So even if you don't think automated trading, and I don't think automated trading can replace human beings on a full scale, what you got to admit, if you're at all a reasonable human being, if you're a person of just common sense, is that they are a million times better than us at doing the boring clerical thing. And what 90% of really good trading is all about is actually doing the boring clerical thing. That's what discipline is all about, and that's why nobody wants to do it. Who wants to do the boring clerical thing? It is, boring and clerical for a reason. And that is why automating something ridiculously simple like this produces something ridiculously beautiful like this, which is this, right? Like if I came to you and I said to you, I have this incredible magic bullet. I'm going to charge you 2% and 20% of all your profits for the rest of your life, but I'm going to guarantee you I'll outperform the S&P for the last, 3,500 years. You'd be like, wow, you're an amazing hedge fund manager. You can do all this stuff. For sure, look at this, look what you did before. I'm going to give you all my money and I'll give you all this. You don't need to do any of this stuff. That's my point. My point is, it's not hard to beat the market. It's hard to do the right things to beat the market. That's the key thing. And computers and automated trading absolutely helps it. I chose this example because there's just literally nothing that proves this point more than this very, very simple but very powerful strategy. Okay? So that's my number one little gift to you. My number two thing that I want to show you is, okay, so of course, my juices got excited about this sort of a simple moving average strategy, and I was, it was on my mind for the last couple of months, and then I had to go to Chicago Traders Show about 3 or 4 weeks ago, and I was looking back through the library of our assets, right? Through the library of all of our former trading strategies, right? And it just Kathy always yells at me for this, and a lot of my traders in my room always yell at me. I actually produce a lot of really good strategies that I completely abandoned because the next shiny thing kind of attracts me, and people trade stuff that I did 3 years ago very successfully because they're sticking to to my rules. So there was this little dusty little strategy that we used to trade. There was a pure price driven strategy called flow. And as I was looking at all this moving average stuff, and I was looking at trend, and of course Jamie's work really, sort of changed a lot of my attitude towards looking at trend-based stuff. I realized, well, this is a pretty good strategy, but if I change the strategy to add a trend filter, maybe it becomes a better strategy. So this is as simple a strategy as I have going. It's called BK Flow, which I traded on 1 hour charts. And all I did, the original strategy basically said, hey, if price goes from the 0 level, so the 0 level is euro dollar rises to 112, right? Rise to 112. If it then keeps on going and hits the 112.50, then the probability that it's going to go forward all the way to 112.75 is more than 70% stronger, meaning a body in motion stays in motion. I don't want to get into all the reasons for why I thought that strategy worked. A lot of it has to do with how real people, big institutional money, big banks really trade stuff. They don't really look at Fibonacci's. They don't really look at the trend lines or the Gann angles or Elliott wave stuff. What they're looking at is actual physical price numbers, and if you can move prices through key levels, and the key levels are always the penny level and the half penny level. And if you go from the penny level to the half penny level, then the move towards the next penny level is very, very tempting, because who is on the other side of the next penny level? Microsoft, who's hedging their books for employment. Other central banks, who need to reconcile their balance sheets. The people with really big money trade in penny levels. So if you can move around on those things, it would really work. But the problem was that when volatility really came down from around 2017. There was very little continuity, and the strategy kind of didn't work as well. So then I had this insight. Well, what if I what if I just stopped doing the stupid stuff and just only traded with trend? What if I only traded flow in trend, which is really what BK Flow is? This is as simple as this. This strategy is on an index card. All you got to do is have a 1 hour chart, 20 SMA, 500 SMA. Can you change the moving averages to different values? Be my guest. It's utterly random and irrelevant, because the SMAs here are not for precision. They're just to tell you that we're in trend. All I want to know is I'm in trend, and if I'm in trend, if I'm going to buy trend, I want to take the buy breakouts, and if I'm in a short trend, I want to take the sell breakouts, right? And here you can see just a couple of examples. This is dollar yen. So dollar yen, the 20, which is the green, is underneath the 500. And the reason why I have such a disparity is because I really want to know if there's if we're an uptrend or downtrend. I want the moving averages to be very, very different, to give me a stark, I don't want, like, every 5 seconds the trend change. If 20 goes above 500, that's a meaningful trend change signal. And I only want meaningful trend change signals. So I get into this look over here, and I have obviously a downtrend going on. The dollar yen then slips below the 107s, right? Now I'm ready. If it slips below 107s, I'm ready to short the 106.50s with a 50 stop, 25 target. Okay. Now, before everybody asks me a million different times why I trade with negative risk-reward ratios, why I'm taking the breakdown trades, why I'm not trading like everybody else, waiting for a retrace, waiting for all those things. The answer, I'm just going to tell you, I'm not going to give you the 55,000 reasons. I'm just going to tell you because it works, okay? You got to just trust me that it works. We can have a massive philosophical argument about positive risk-reward ratios and negative risk-reward ratios, and honestly, it really doesn't matter. Adam had a great presentation with which I wholeheartedly agree, of trading sort of a 1.5 to 1 R, right? If you trade the way he does. If you're trading this particular strategy, and I have other strategies where I obviously have positive R expectancy, but if you trade day trading strategies on a momentum basis, you need to have negative R to have positive expectancy. That's all I'm going to say. I'm not going to get it. I'll show you the numbers, and it's, you don't need to believe me. I'll show it to you, okay? But anyways, so price, I make money over here. Then we go back up, we hit the 107 again. Now here's the beautiful part. We're still in a downtrend. So if we hit the 107 and then we come back and we hit the 106.50s to the downside, you bet your little fanny I'm going to short the hell out of this thing. I short again. I make money again in dollar yen, right? Here's euro pound to the other side. I have a very nice, beautiful uptrend. Euro goes through the 170s. I buy the 170.50s. Boom, boom, boom. This actually was 2 positive trades. I bought the 170.50s over here, May 25, and then of course over here after the RBNZ decision. Now, here's the thing that everybody's going to tell you: don't trade after the news. It's all factored in. It's all done. No, it's not. This is proof positive. I'll show you the trades. The RBNZ decision was over here, this big candle, right? I buy if it goes further, and it does go further, because my argument is if it goes further, that means there's more juice to squeeze out of this trade, and it does. And it was obviously very, very profitable. My point is, there is no global truth in trading. There's only intelligent, logical structures to how you should trade. Now, what's beautiful about this particular logical structure, here's the thing. We trade live in the chat room every single day. Kay and I trade live in the chat room every single day in BK. And, I can tell you right now, there was never a period of time where I made 14 out of 15 winners. Never. I never came close, right? So did I suddenly become an incredibly great trader? Did I suddenly become like Mr. Market Magician? How did I suddenly become so incredibly in tune with the market that I'm hitting like a 90% win rate out of this stuff, right? The answer is I stopped being stupid. That's all it is. All I started doing was only trade flow in the direction of trend. Once I started doing that, it was amazingly easy to put myself into positive trades, right? And you can see, by the way, that I'm of course ignoring half my rules here. I'm exiting early all the effing time. Now, just to show you why computers are going to be our overlord masters. So we have coded this. Of course, I just started coding this. That was me trading. This is me trading, right? This is the computer. Where do we go here? Where's my computer thing here? Oh, hold on a second. What did I just do? Let me find it. Oh, here it is. So that's the computer trading. As you can see, the computer is a lot more profitable than I am. Okay. Now this is it's what I'm basically using the computer now for, is to actually give me trade ideas. It generates a trade. This is a demo account. It generates the trade ideas, and then I just decide, okay, I'm going to take it. I'm going to net take it. But the point is, I'm letting this whole run to my actual rules, and it's only, it's making a lot more money than me, because it's obviously milking the trades all the way through to its full extent. But it doesn't matter. The bottom line is, we want to win, right? If I win 80% of the potential total pips that I can make, let's say I can make 10,000 pips, and I, because of my human frailties, only made 5,500 pips that year. Is that better than losing 5,000 or 10,000 pips because I've been stupid and because I'm following rules but in a stupid manner? Of course, it is much better to not follow or to follow rules poorly in a smart structure than it is to follow rules to the T in a stupid structure. That's the whole point that I'm trying to make to you. And the beautiful thing that I did was I actually changed the structure to an intelligent structure. Now, you guys want to you guys want to just trade a couple of charts with me? I'm happy to do this. Let's just go. Let me just change my screen here to screen 2. And we'll do this. You guys call it out. You give me any currency pair. Hang on, I'm gonna move my screens away from you guys so I can see you. Okay. Just bear with me a second. All right. You guys call out any currency pair that you see over here. You just call it out, and I'll we'll go back and we'll see if my trade setup works or it doesn't work. So go ahead. Let me see what you guys got at me. Yeah. So everybody sees the video. I see the video. Okay. All right. Come on. Dollar Aussie. What? Dollar? It's Aussie dollar, Craig. Oh my God, Craig, please, 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 please. It's Aussie dollar. Let's do conventional. So okay, Aussie dollar. Let's do this. Let's do this. We're going to look at Aussie dollar 60-minute chart, right? First order of business. First order of business. We got to have trend. So we have negative trend. It means I'm only looking at sell trades, right? So now I got negative trend. What are my rules here? It crosses the 69. It crosses the O level. No, sorry. This is the 69 level right over here. Crosses the 69 level right over here. Crosses the O level right over here. What do I do? What I do is, once I have the 69 level crossed right over here, am I marking it right? I just want to mark it right. Yeah. Let me just do this like this. So I just marked it. So I cross the 69 level, right? Now I don't move until I can get down to 68.50. Until I get down to 68.50, which by the way happens right over here. This candle over here. So what I do is the algo actually says, oh, you cross 69. Then when you get to about 68.75, I'm going to put a buy sell stop at 68.50. It puts out an actual sell stop. It anticipates the break of that level. So I'm in the market on a sell stop. So I sell 68.50 right over here. My stop is 50. My target is 25. It doesn't quite go to my, see, it's 28 over here. If you guys looking at the lows here, it goes to 28. And of course, I would have covered this trade long ago, but it doesn't quite go, doesn't quite go. And then eventually, right over here, 33, doesn't quite go. If I'm an algo, I am patient enough to actually go back to negative profit. I have positive profit, and then I have negative profit, which is a fancy word of saying I got losses. I go back into losses, and then boom, 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 it actually makes it plus 25. If I'm trading this on a prop level, I would have been, out of here plus 16, 17 points 3 or 4 hours after the trade. But that's not, so it's fine. Trade 1, I'm a winner, right? Now, the next level that I need to break, which is the 67 level, right? 67 level. Does it break the 67 level? Yes, it does. It breaks the 67 level, right? So, no, sorry, 68 level. Next level, we're going to break is 68. So now I'm looking to sell the 67.50 level, right? So where does it break the 67.50 level? Right over here. It breaks 67.50 level right over here. I make another, bank over here. Right over here, it tests it by 1 or 2 pips. Right over here, it tests it by 1 or 2 pips, but it does not break it. And that's the thing. Until and unless those bids go, I don't blink. But once they do go, I have an avalanche and I make money. So 2 trades positive over here, all done. Okay, okay, guys, please give me like actual real people. Give me like dollar. I don't trade dollar Mexican, pound Aussie, and euro pound. Let's do 2 more. So I'm getting euro pound. Euro pound is ridiculously easy. Euro pound was super easy, but actually like a great example, by the way, like of ups and downs. So let's do the euro pound, because this is a trade that I've been trading for. You can see I did a lot of euro pound trades in my chat room. So first of all, we start out positive trend. We got 9100, 9100 over here, right? So now we're only going to buy if it goes to 9150. It goes to 9150, like right over here on this candle over here. It actually goes from over here. The closing basis here is 90.37. The next candle is 91.50. I remember this trade made money literally in 1 hour. Usually it takes between 1 to 12 hours for the trade to go to full profit. This one went to full profit in 1 hour. So now 91.50, boom, we make money. Next level is 92, right? So now we're at 92. We're looking to buy 92.50s. 92.50 is right over here. Boom, thank you very much. I'm done, right? Now, I don't do anything until and unless the level, comes back down and then reignites its momentum. So it goes back down to below 92s and never comes back up through 92s again. So now it goes all the way back down. I'm ignoring all these trades. I'm not even looking at shorts. I'm not touching it. I'm not being stupid, right? I'm just ignoring all of the stuff which probably is not going to work. And now it regains its strength. And now it comes back up to, we got to be looking for the 92s. So right over here, it hits 92s, right? And this is the interesting thing. So it hits 92s over here, and now we're going to buy the 92. It doesn't quite come up to 92.50s over here. 92.41 comes back down. Again, recalibrates itself up. You see how it's not putting me into bad trades as long as it's not breaking those key levels. It's just not breaking those key levels. Now, over here, finally it breaks the key level, right? It breaks the 92.50 level right over here. And I took this trade, and because, and this is where my humanity actually served me well. The algo stayed in this trade. Right? I got out plus 17 or plus 15 because I saw this was London fix. It was the end of London hours, and I was like, they're just ramping the trade up. So let me just take my money and run. I made money. The algo stayed in this trade, right? And here's the thing that's very painful. You need to understand about the business of forex instead of the theory of forex. You see, the beautiful thing about everybody, all of us in BK. And what I try and do, BK, is I try to show the reality of forex, not the BS, imagination of forex, which is what many, forex gurus show you. They show you charts. They don't show you how the reality of happens. If you look at this chart over here, it looks like I would have survived this move down and I would have made money, right? Yes, that would have been like a nice, pretty picture that I could have showed you. But in reality, what happened is the algo got stopped out. And why did it get stopped out, even though the low was 92.04? Was because this is 1700 hours New York. This was the close of the market. Close of the market, we had roll. When we have roll in the FX market, most of you will notice that spreads go from being 1 wide to being 20 wide. Spreads just, it's just end of the day, spreads were like 20 wide. That was another reason why I didn't want to stay in the trade, because I knew we're coming to end of the day trade and they were going to widen me out. So they widened out the spreads, and the actual bid was 04, but you got stopped out. So the algo got stopped out. But if if I was bullshitting you, I would have said, oh, this trade stayed in and it went in to go make money. The bottom line is why the euro pound is so interesting right now is because it's like multi-year highs. If this thing goes 93.50, you bet your sweet bottom I'm going to be all over this trade, trading it up. Everybody's going to be telling me it's a short, it's a short, it's a short. It's not. It's going to be a beautiful momentum trade. It's going to squeeze you to death if this thing goes. Because if this thing goes 93.50, that means cable is going to break 20s and 19s. They're going to flush this thing miserably to the downside. So the point being is, I love this. This is my newest setup. If you guys want to trade it with me, if you guys want to join me, I actually have a super kind offer. Let me show this to you. Thank you very much for Pepperstone for doing this. But let me find it. Hang on a second. I'm going to give you the link. I'm going to send this link to you guys in the room, and then I'm going to show it to you, because this is something we have never done, and Kathy almost wanted to kill me for it, but Here we go. So let me show you what you can do. If you guys want to learn this particular strategy with me on a day-to-day basis, right? You actually can join my service, get mine and all of Kathy's ideas, which I haven't even talked about, for free. All you guys got to do is deposit $2,500 for 3 months free with Pepperstone, $5,000 for 6 months, and $10,000 for a year. No money at all. You get everything, including this particular strategy, and of course the algo that we're going to have. Just hit the sign up link if you guys want to do it. I send you the link. I'll send this link to you later. But that's my only pitch to you guys. I'm super happy that Pepperstone is kind enough to have done this, because this is going to give you access and opportunity to what I like to call, Kathy doesn't like to do this, doesn't like me to be crude, but I'm a New Yorker. The tagline for BK is no BS trading, because we trade for real, we trade real time, all the pain, all the suffering, all the beauty, all the love of the markets every single day. And if you really want to understand what it takes to make money on a consistent basis, I would love to have you guys in the room. So that's all I got to say. Let me see. There is, and by the way, sorry, this applies to if you guys already have an account and you want to just top off, it's good. It's perfectly fine as well. Anybody who is unable to be Pepperstone client for regulatory reasons, well, then just get in contact with us. We'll try to figure out something for you. But for pretty much for like the vast majority of the world, I want you guys to go in there. I love this broker. Like I said, my greatest regret for being an American is that they can't be my primary broker. They would have all my money if I could. So for all of you guys who are not American, you're very lucky. Go out there, open an account with them, or top off your deposits, and you'll get me and all of my potty mouth as a prize.